Hey WealthLab 8 users, Glitch here. Today we are going to talk about what's new in WealthLab 8 Build 12, and this will also serve as part 2 of our feature spotlight video highlighting the chart patterns extension, which has to do with how we calculate the PriceGrid confidence factor. So let me explain. I created a strategy here that creates two price grids in the code. So a price grid is a way to look at the data on the chart. In this case, we're creating a price grid with a dimension of 10 by 5. So that is 10 bars across and 5 little steps high. And we'll see how that works in a minute. So the parameters here are the width of the price grid, the height. The source data is coming from the bar's history in the initialize method. And the last two are the starting and ending index that should be used to get the data from. And you notice that we're using bars.count minus 10 to bars.count minus 1. So this is 10 bars of data ending at the end of the chart and going 10 bars to the left. So that 10 bars of data corresponds to the width of 10 we had here. We don't need to use the same number of bars because the price grid will automatically compress or stretch out to fit whatever indexes you pass here into the specified width, but it's just as easy to specify the same width using these parameters as you do here in the first parameter. So that's our first price grid. We then create another price grid of the same dimensions, 10 by 5, but starting at 5 bars back, shifted back. We then use these pictogram properties to render the price grid onto the kind of header area of the chart, and you'll see how that works. And we then run a comparison. So we do price grid 1 compare to price grid 2. That results in a number between 0 and 100, which tells us relatively how closely those price grids are to each other. And this is where the change comes in. There's a new optional parameter here. Use legacy calculation, because as of build 12 we improved the calculation of this comparison. So let's just run this and take a look at the chart and see what we get. So here on SPY we could see the last 10 bars of the chart, kind of went up a little and then down and then up. So the first price grid that we're capturing here kind of shows that movement. With the X's, you can see things go up, go down a little, and then back up. If we shift over 5 bars, we're capturing the area here where we started down, and then we went up, and we came back down a little. So that's this price grid. We started down here, we came up, and then came back down a little. So the X's represent, in this pictogram, the X's represent where there was some data in the chart for that cell, and the dots represent where that cell was empty. So the first comparison using the old legacy method returned 44, comparing this price grid to this one. The new compare method returned only 34. So what's different here? Let's take a look and analyze the legacy method. So what that does is it looks at each cell of the price grid 1 and price grid 2. So here is cell 00. It's a dot here. It's also a dot here. So that counts as a hit. It goes on to the next one. This one is an X. This one is a dot. So that counts as not a hit. So it compares each cell, and if the value is the same, it counts as a hit. So basically with the legacy compare, 44% of the cells were matching, whether they were blank or had data. So with the new method, comparison method, down here, where we result in only a 34 match, what it's doing is it's looking only at cells in the PriceGrid 1 where there is data. So it's ignoring any of these dot cells. So we're looking to make sure that where we have X's in PriceGrid 1, we also have X's in PriceGrid 2. So the first match here, this first X will be not a match. So we then continue. Let's see where our first match will be. We actually have no matches in this first row. In the second row, looks like we wind up having one match. This X right here is actually a hit both in PriceGrid 2 and in PriceGrid 1. So at the end of the day, we count up all of these matches on X's, and we get the percentage of the hits as of the total number of X's in PriceGrid 1. So 34% of the X's in PriceGrid 1 had hits also in PriceGrid 2. So it results in a more accurate measurement, especially if the price grids are very long. With the old method, we had a lot of matching of empty space. So resulted in a compare that wasn't as useful as the new method, which is using only matches for data, cells that contain data. So that is the new comparison method for PriceGrid. Let's see how that plays out in our chart pattern extension. Let's go to the PriceGrid Editor. So here the PriceGrid Editor lets you create, name, edit price grids. I think we did cover this in the previous feature spotlight video, but we have now a new checkbox here. So you can use the legacy confidence factor for the price grid. So I clicked on this steep decline here, which is basically a declining pattern, and we can see that. Let me move this over a little. There we go. We can now see the axis. So we can see it rarely goes above the 50 level now. And here it's hitting 100. This is the point where I created the price grid. So of course it's 100% match at this point. So it even kind of averages maybe 20 at this point with the new calculation. If I switch to the old calculation, we're still at 100 here, but you can see we're now at 80, we're at 70, we're at 60. So because it's matching all of those blank cells, we're getting a much higher result with the legacy calculation. With the new method, we quickly dip below 50. So take a look at the new calculation method, and you may find it preferable. If you do want to keep using the old one, of course, that's always possible. And it's also possible in the indicator. So if we go to our PriceGridCF Indicator, we now have a new parameter, use legacy calculation. So if I use my steep decline, I can drag it over a second time, and this time use the legacy calculation and maybe change the color. Make sure I use the same pattern. So here we have both of them, so we can see at a glance how the new calculation method dips down much more sharply than the old one. So use the indicator to give yourself an idea of how the different calculation methods work. If you're like me, you may prefer the new method, and special thanks to Volker, who identified this issue in the calculation, and we were able to quickly create this new method to improve how the price grid comparisons work. So let's take one last look to flesh out part 2 of our feature spotlight for the chart pattern extension. and that is the PriceGrid Genetic Evolver. And this is a tool that will let you generate new price grids based on your source data that you happen to load in. So I'm going to load in maybe the Dow 30 and let's say daily data, and I will give it a data range of, let's say, the year 2000 to 2005. And then my out of sample range, we'll pick the Dow 30 again, and we'll say daily, and we will say a year range of 2006 to 2023. So I defined an in-sample, out-of-sample range. I can first of all evaluate my existing price grids that I defined. So it's going to tell me how many observations, how many times those price grids were found in the in-sample and the out-of-sample. Then it's going to give me the average percentage return after 10 bars. That's configurable here. So the overall market return is here, and my price grid return is here. So you can see whether or not your price grid is giving you an edge over the average market return. So quite an interesting tool. Let's go to the Evolver tab and click Start, which will generate a number of random price grids and then go through generation by generation and mutate them and come up with profitable price grids using the in-sample data. So let's let this run for several generations. I'll speed up the video and then we'll see what we wind up with. Okay, so it processed 10 generations, so let's stop it here, let it complete generation 11, and let's take a look at our top price grid that it happened to settle on. So it has a 10-bar return of 0.55% compared to the market average of 0.07. This is what it looks like. It's a small one. So it happened to occur 5,000 times. So whenever this price grid pattern occurred in the data, it was typically a good time to get in if you're going for a 10-bar return. So with this in mind, what we can do is right click on here and add this price grid to our library. Let's call it Little Engine, the little engine that could. So I've now got that in my price grid library. If I go to my editor, I can click on it here. I can pull it up, look at the legacy calculation, the regular calculation. I could use it in a building block. I could use it in an indicator. And that does it, I think, for part 2 of the chart patterns extension feature spotlight and the what's new in WealthLab 8 build 12. So thanks everyone. Take a look at the chart patterns extension. There's a lot in there. Part 3 will cover the classic chart patterns, head and shoulders, double top, double bottom, etc. But that's it for now. Thanks for watching everyone, and see you all on the forums.